Good morning, guys. This is Uche Lawrence, and this morning I want to talk to you about when is it time to actually combine credit cards. So I have two credit cards. One is the Discover It card and Discover It Miles card. So those two cards, I'll be honest with you, beyond each of them carrying a bill, I don't really use as much. And the reasoning really is because of credit utilization. So I tend to use my cards that have a high credit limit because if I have to make a major purchase, let's say if I only have a $4,000 credit line on a card, if the purchase is $2,000, guess what happens? All of a sudden, as soon as I use that card, it's at a 50% credit utilization, which that's no bueno, not a good thing. You want to always keep your credit utilization under 30%. Personally, I keep it consistent under 20%, 10% or less is even better. So, which means the power of your credit cards really is going to be based on your credit limit, because the higher the credit limit, the more you can do. But sometimes, let's be honest here, the goal is to not pay any interest rates. And what happens is if your credit card balance supersedes that 30-day plus or so a grace period, then you're charged interest rate. Your goal should always be to have the cash on hand, make the purchase, pay it off immediately, so you can get the benefits of the cash back or the rewards points that you might earn for that credit card. But let's be honest here. Let's be realistic. It happens where there's an emergency and you have to make a major purchase, and you might pay it off in one or two shots, and that payoff might happen right after the 30-day period. So you end up incurring some sort of interest. So it happens. But I'd rather take the interest, I'll be honest with you, because it happens rarely, than take the hit to my credit for going over my credit utilization. So back to today's topic. And I'm going to ask you for some input. Please comment below while you're at it. Subscribe, like, share, but definitely like. And if you don't like, give me a thumbs down also as well, and tell me why not. Because I think I'm not constantly searching for likes. I'm actually searching for actual discourse and conversation. So in this case now, I have two Discover cards, which I want to be able to use more often, so I can rotate my cards every month so that I can get a good usage of them. Because the more you use your cards, the more the banks are like, whoa, this person's using this card, so let's give them more money because they're buying, they're paying things off. And that's how it is. Credit cards are pretty much relationships, relationships with the bank. If you use the card often, you're responsible with it, then you will get higher and higher credit limits. And one other thing is this to remember: if you have a $1,000 credit limit on a credit card, the chances of you going from that 1,000 to 10,000 is very slim. They're going to increase you, in increments based on what you're doing with that $1,000. So you're not going to go from 1,000 to like 10,000. That's super rare. You might go from 1,000 to 2 to 5 in those jumps. So right now I have the two cards. One card I believe has $3,500 on there, so $3,500. The other card has about $7,000 on there. Not bad, But what I'm going to do is combine both of them. So what's going to happen when I combine both of them? I'm going to have, what did I say? Yeah, I'm going to have, my math is off this month. I'm going to have $10,500 on combined onto one card. And what does that do for me? A lot more buying power. I can put more spends on that card, and the next time I'm up for a credit limit increase, I can request more. The thing is, general rule is always try to request double what you already have, but you also want to make sure you have enough spend on it to justify the double. But if you have enough spend on there and you request double, there's a good chance that you're going to get that double. So, and of course, remember, every card has its eventual limit, but the key is to actually prove to the banks that you know how to manage more. So what might be the disadvantage of doing this? So the disadvantages might be my average credit history might drop because I'm going to have to close down one card. But what I'm actually going to do is I'm going to close out my newest card. So that shouldn't impact my credit history as much, because your credit history is really based on the average length of your credit. So what I'm going to do is I'm going to take my Discover Miles card and then put that back into my Discover It card, because the Discover It card is one of my earliest cards that I have. So now I'm going to put those cards together and then have one card that has, over $10,000 credit limit on there. So and that should give me more buying power. And of course, my goal is not just to have tons of credit cards, but it's to actually have buying power, to have an increased credit limits. So I would love to be in a situation to have $200,000 or $300,000 credit limit, because the general saying, or the general rule, is better to have the credit limit when you don't need it than to need it and not have it. So yeah. So please let me know what you think, and if you've tried this, tell me how it worked out for you. And I look forward to talking to you guys again. This is Uche Lawrence. Have an amazing day, and I'll talk to you guys soon. All right, peace.